Hey everyone, welcome back. This is part 2 of how to get a best mortgage rate in 2022. So last time we covered a lot of stuff, but I decided to make a follow-up video and call it part 2 because what we wanted to also talk about is some mortgage pricing and strategy, right? We want to make sure that we use the strategy of the interest rates, to get the best deal for us. So first thing we have to do is define what is the best deal for us. Is it more cash, keeping more cash in the bank after closing? Or is it getting the best cash flow possible at all costs, meaning you're willing to pay up front to get that cash flow? Everybody's got a little bit different of a situation. So today, in this video, what we're going to cover is different strategies for getting the best mortgage rate for your situation. All right, guys, let's get into it. I'm going to show you a live pricing calculator from one of our investors. Now, like I told you, we're a broker. So what you're about to see is how we work in the background on pricing out mortgage loans. And we're going to show you some options that you as the consumer have in terms of taking higher rates or buying down the mortgage. Once you see that, it gives you a real understanding as to what people are offering out there. All right, so let's get right into it. So the strategy I'm pricing out here is just really a 760 FICO score with a primary residence. It's going to be a single family detached. I didn't put in there any type of condos or, so just going with a single family residence. And we did a FICO score, like I said, of 760. We have a purchase price of $700,000, and we have the borrower putting down 30%, so our loan to value is 70%. Okay, so the first thing we're going to do is we're going to get a little bit of a rate stack. Okay, let me show you what that looks like. So here it's just going to show us all the different programs that we're eligible for. That's important. It's not guaranteed financing, it's eligible for the financing, right? Based on the terms that we set in the pricing calculator. All right, so you can kind of see all of these different programs. Now let's get into how to price them. So the first thing we're going to talk about is if you are somebody that is looking for the best cash flow. Okay. So looking for the best cash flow. Now what I did was I chose the 30-year fixed rate, and I'll show you why. With the 30-year fixed at 4.8 and then a 7/6 ARM at 4.8, it would make more sense to me just to go with actually the interest rate is just a little lower. You can kind of see right here it's actually more of like 4.83 compared to 4.85. Okay. So there's the 30-year fixed rate mortgage, and going from 4.8% all the way down to the lowest possible offered rate of 4%. Let me just do this. All right. So when you're looking at this interest rate, of 4%, you can kind of see how they show the pricing. That's 4 points. The final price after the adjustment here for the FICO score being between 60 and 75%. They're adding a quarter point. You can kind of see it reflected right there. So the total dollar amount after your final price of 4.3 is $21,000. So the $21,000 is not your total closing cost. The $21,000 is just the amount of money that you need to pay in order to get this interest rate of 4%. All right. All right, so now let's say that you're somebody that wants to save money on closing costs, and you'd rather take a little bit higher of an interest rate because the cash up front is more important to you. Let's look at some of those options. Now, here again, let me just show you up here. Here again is the interest rate that we're looking at in this column. And then we're just going to kind of ignore these two columns here. And we're going to look at the dollar amount to purchase it. Actually, we'll look at the final price as well because that tells us the number of points. but you can kind of see whether or not the break even would make sense, because you can see how much it costs, and then you can do a difference in the payment and find out where your break even point is. There would probably be one. It might just be too far down the road, like 5, 6, 7, 10 years. Then it makes more sense. Maybe you're not going to keep the mortgage for 10 years. Makes more sense to, take a little bit higher of an interest rate. You just have to really put the numbers to the pencil and then decide what's best for you and your scenario. So in the event that you did want to pay for your closing costs with the rate, that can be possible. So you've probably heard of lenders saying no closing cost loans and things like that. And the reason that they're able to do that is because you're going to have the par interest rate, which the bank is getting from or giving to the loan originators. You're going to have the par, which means the interest rate that the bank's going to for sure collect. So that's your 4.8 in this case, right? We call that par. I know that's a really weird term. I thought that myself. I was like, man, that's like the golf thing. Like when I'm golfing, I have to hit par, right? But yeah, anyway. Now, let's say that your closing costs are a total of $7,000 on this loan, probably more like $9,000. Okay, so we'll go with $9,000. Basically, what you can do is you can take the interest rate right here of 5.5, which is higher than the 4.8, higher than the 4%, but you can see here that the lender credit, meaning this money right here, this 9971.5, that's to pay your third-party closing costs like appraisals and your title fees and some of the taxes. And so depending on what strategy you're using, that's going to determine which interest rate you should choose. A lot of people, so when I bought my house, a lot of people thought, I would take the cheapest interest rate, but my strategy was simple. I didn't want to pay the closing costs, so I took a half a point higher of an interest rate. For that half a point, I was able to get $6,000, which on my loan covered all the closing costs. Now, I ended up refinancing that loan and got into the twos, so it was definitely a better deal for me not to keep my cash, pay a little bit higher of an interest rate because I knew I wasn't going to keep the loan long enough for it to make sense to pay the buy down or not take advantage of the lender credit, right? So anyway, guys, I hope you found this useful. This is just part of our series of how to get the best mortgage rate in 2022. All right, thanks a lot for tuning in, guys. If you like what you heard, comment, share, subscribe. That way this reaches more people. All right, we'll see you next time, folks.